Okay, so last week, we have discussed the first topic in Takaful, which is a risk. Because only because of the risk happen, then Takaful is offered in the market. Takaful is needed in the market to cater for the financial difficulties in facing the risk. Okay, in human life lah. Okay, so today, insyaAllah, we will continue the topic. I will discuss what is insurance and the difference between insurance and takaful. Okay, so I try to make it okay, this one clearer. Okay, so what is insurance? Okay, what is insurance lah? Okay, so what is insurance? Insurance is a contract between policy holder and insurer that stating consequences of losses are transferred to the insurer, and also the insurer promised to pay for the consequences. Okay, last week we have discussed 5 methods of handling risk, okay, which are risk avoidance, risk reductions, risk retentions, risk transfer, and also risk sharing. Okay, okay, so insurance basically adopt a risk transfer concept. Okay, okay, and then the parties that involved in insurance is the policy holder or the customer that need a protection, okay, and also insurer, which is insurance company. Okay, two parties only. The customer we call policy holder because they hold the policy until something happened to them, and then they will return the policy, show the policy to the insurer, and then the insurer will pay them. Okay, any amount of protections that been promised in the contract. Okay, and then the insurer is the insurance company that hold the risk. Okay, so we refer back to the concept of risk transfer. So the risk of the policy holder now is transferred to the insurance company. Okay, so insurance company we call insurer, the one that insure the protections of the risk. So the consequences of the insurance contracts are, okay, the losses or the risk itself is transferred to the insurer. So risk transfer. And then the insurer promised to pay for the consequences, meaning that consequences of the risk. When the risk happens, it is promised by the insurer to pay for the losses. Okay. Okay, and then the concept of risk transfer from policyholder to insurance company, not insurance operator. Okay, so so what is the result of risk transfer? Now, because of the risk of policyholder is transferred to the insurance company, so the policyholder need to pay monthly premium. Okay, monthly premium. We call premium, not contribution like takaful, because premium is like the deposit. Pay monthly premium to transfer the risk. Okay, and then how about the insurer? They get paid. They receive the premium for assuming the risk and promise to pay for the loss. Assuming the risk meaning that when the policyholder submit the applications to pay to buy the insurance policy, so the insurer they assume they will screen the risk of the risk level of the policy holder. So from that they will assume lah how they screen the policy holder need to fill up the form, kan? So usually we will fill up the form, so and then we need to fill up certain details like we are smoker or non-smoker, our family background, whether have a heart attacks history or kidney failure, any cancer, so we need to fill up so that for the insurer, okay, to screen whether the policy holder is risky or not. if they are risky based on the informations like a gender, age also play important factor for the risk assuming. Okay, so after that they will inform the policyholder how much the policyholder to pay to transfer their risk to the insurer. Okay, so basically it is the job of apa nama dia, not the treasury, I forgot the terms, the ones that basically expect the risk. Wait, anyone? Apa namanya, what's the division? There is one division that their job is basically to calculate the risk of the policy holder. Okay, I forgot when, if I remember then I will inform. Okay, then now the insurer indemnifies policyholder of a defined loss.
Is it under
Underwriter, yes, underwriter. Okay, thank you sister. The underwriter lah. Okay. 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 Okay, now they're assuming the risk, and then insurer indemnify policyholder of a defined loss. Defined loss is all the risks that stated in the contract lah, in the insurance contract. For example, death benefit. Okay, death benefit 100k, accidental benefit 100k. Okay, wait, I need to, somebody wanted to join us. Najwa. Okay, welcome Najwa. Okay, let's continue. Okay, so defined loss is the loss or the list of benefit. Okay, that already defined in the contracts. Then we call defined loss. Usually, it is just expected loss lah. Loss or the real loss only, we only know the real loss when it happened, kan? So everything is expected. They just assume. Okay, so it is actuary job. Okay, define loss in exchange for premium payment. So policyholder need to pay the premium, so exchange with the all the protections, list of protections stated in the insurance contract. Okay. Okay, and then insure against pure risk. Okay, do not cover speculative risk. Okay, as I mentioned in last class. Okay, so insurance or takaful will not cover speculative risk. They only will cover a pure risk, which is the risk that we but do not expect it to happen, like a death, like a fire, accident, so any illnesses. Okay, and then it is predictable. Still the risk is predictable, but it is not certain lah. It can be predicted based on a certain factor, like economic, like culture, like apa nama dia, living, apa nama dia, kita punya gaya hidup, style, lifestyle. So measurable is measurable. Okay, how much basically based on the historical data. So the actuaries will calculate basically for the motorcycle accident, how much is the loss, okay, maybe 5,000. So they will offer the protection is 5,000. Okay, based on that data. Spreadable over large geographic area. So it is not only based on personal. So it is for the public. Okay, the loss, the risk that happens to general public, and it have happened last time. Okay, previous time lah. Okay, so it depend on law of large numbers, use statistic and actuarial science to predict, to measure all the risks. It depend on law of large numbers. Law of large numbers is looking for the majority. Like say the statistic on death among a female and male. So which gender that have extended period of life, like so based on statistic, female will live longer than male. So uh, basically female is riskier than male, so higher premium. Okay. Okay, so do not cover speculative risk because the uncertain prospect of financial gain or loss, and do not cover general business failure lah. Do not cover speculative risk is the risk that we can speculate. It is by apa nama dia, we have options. Do not to take the risk like investment, like going apa nama dia, involved in uh, extreme sport activities. So it is, we have option not to opt for that, for to involve in that games. Okay, so it will not be covered. If we want to apply for the coverage, we can telemat the, we can apply, but it depends on the insurance company lah. Usually it will not be covered because it is risky. Okay, so uh, so under the Malaysian Insurance Act 1996, insurance business is divided into three. Okay, so this one Insurance Act lah. So life business insurance, general business insurance, and reinsurance. Okay, what I can say here is about the same. Life, same with Takaful lah. Life business insurance, in Takaful we call family Takaful. General business is general Takaful. Reinsurance Takaful we call re-Takaful. Okay, so what is life business insurance? Insurance that is contingent on human life, that's related to human life. Okay, examples would include a policy that pays out 100k if the life policy holder dies, death benefit. Okay, so everything related to our life we call life business insurance. And general business insurance other than life, okay, it's not life business insurance, which is including automobile and homeowners policy, and provide payments depending on the loss from a particular financial event. Other than risk related to life, we call general business insurance, like a motor insurance, like a fire insurance, or buildings insurance. Okay, so the one we call general. Okay, to protect property. And then reinsurance, sharing the risk by insurance companies. Part or all of the insurance risk is assumed by other companies in return for part of the premium paid by the insured. Reinsurance enables a client to get coverage that will be too great for any one company to assume. So what is reinsurance? Reinsurance is second stage of risk coverage. Like say, now we only have two parties in insurance business, policy holder, insurer. So the third party would be reinsurer. Reinsurance company or reinsurer lah. Okay, so now the job of insurance company is an insurer. They will insure the risk of the policy holder. So in order to secure the protections, this insurance company will seek help from the reinsurance company together to protect the risk of the policy holder. Okay, it is second defense of the insurance company lah, to protect the risk of policy holder, not to protect the risk of insurance company. No, because the main client is policy holder. Okay, so it is same with Takaful. Okay, we have a re-Takaful. So now Takaful operator will work together with re-Takaful operator to protect or to manage the funds Takaful on behalf of the Takaful participant. Okay, clear?
Doctor,
Yeah.
for the reinsurance, let's say today I buy the life insurance from Great Eastern. So what do you mean is Great Eastern will buy another insurance from another company to share their risk?
Okay, no. Basically, they will not buy, but they will apply protection from reinsurance company. We have a list of insurance company. Okay, now the insurance company, they will pull all the risks that they receive from the policy holder. So they will seek help. Let's say they have a general risk, a fund, general risk to protect. So they will seek help. They will basically not buy the policy from reinsurance. Reinsurance company will not sell the policy. Okay, it is just a backbone of the insurance company to secure protections to the policy holder. Okay, so they will cooperate, joint venture lah, like joint venture with reinsurance company together, because there are many types of reinsurance business, whether they want to only seek help certain percentage of the risk that they receive from policyholder, or whether they want to seek help to protect 100%. Meaning to say reinsurance company come just to protect 100% of the general insurance that the insurance company receive from policyholder. Okay, it depends on the types of reinsurance business. Okay, now insurance company will not buy any policy, but they will pay a premiums. They still need to pay lah the premium to get a protection, second layer of protections from reinsurance company to ensure the risk of the policy holder. Okay, so when the policy holder sign the insurance agreement with insurance company, nothing, no involvement of reinsurance company in the contract, just the contract between the two. Okay, but to protect, to ensure that insurance company able to pay any losses when maybe it is a huge loss. Okay, later on, so that is why they seek for second defense from reinsurance company. Basically, not many reinsurance company lah, because they need to have a huge capital to start the business. They insure the big basically big pool of risk. Okay, clear?
Okay, yeah, all right.
Okay.
Doctor, if then who's the backbone for reinsurance? If
Backbone, ah,
yeah, I
no.
mean, who's the second defense for it? I mean, if the insurance company have second defense or
Mm,
backbone, like in reinsurance, so who's
mm.
the second defense for reinsurance?
No, tak ada.
If anything happen,
No. The insurance company is because that's why not many, not easy to open reinsurance business. Only the big player have the capability and capacity to run the insurance business. Then they will sustain. If not, they will just close up their business. So they are strong group of company.
doctor, is it what complementary to for insurance company to apply or seek help
Mm.
from the insurance?
Yes,
Yes. Oh.
yes. Okay, because in the act, the insurance company need to ensure that they have more apa nama dia, their asset is must be more than their liability. So risk is their liability. So they have to ensure that they have enough capability or enough asset to cater for the risk, because the business is very risky. They are managing a risk of policyholder. So usually, basically in the market, all insurance company or all takaful operator will have subscribe with the apa nama dia, reinsurance or takaful company. Okay, they have to show to the bank negara that they are capable to protect insurance of the risk of the customer. Yeah. Okay, any other question? Here. Okay. Okay, now why is conventional insurance not Sharia compliant? Okay, so based on the fatwa on the provisions of insurance, okay, the National Fatwa Committee Malaysia, okay, the Fatwa Committee of National Council in 1972, okay, in their meeting, they have confirmed that the life insurance provided by present day insurance companies at the time is a business transaction which is voidable because it contradicts with the Islamic business principles, because it contains the elements of gharar, maisir and riba. Okay, so we will discuss each of these later on in order to differentiate between the insurance and takaful. Okay, so that is why, because of these three elements, so the meeting have confirmed that insurance is haram. Eh? And in addition to that, okay, the Islamic Fiqh Academy (OIC), the international level, the national fatwa is national level in Malaysia, and the international level also, the OIC, the second meeting session in Jeddah, the Kingdom of Saudi in 1985, about maybe nearly 10 years after that. So they have confirmed that the commercial insurance with fixed periodical premium, which is commonly used by commercial insurance companies, is a contract which is contains major element of risk, which avoid the contact, and therefore is prohibited. Okay, cakap ni. Okay, contract sama lah actually. So they also found that there are elements that contradicts with the Islamic principles that been practiced by the commercial insurance companies. Okay. Okay, we will discuss each of these. So, okay, before that, I want to share with you a few terms of takaful, which is different with the conventional insurance. Okay, we return back to this page. Okay, so in insurance, they call policy holder and insurance company, because the customer hold the policy, isn't it? So in takaful, the customer we call a participant, because of what? Because the customer actually, when they subscribe to takaful, they contribute. Okay, they contribute the fund. We call contribution. Okay, in insurance company, the money that paid to the insurance company we call premium. In takaful we call contribution. Eh? So policy holder in insurance company, and in takaful we call participant, and insurer in insurance, in takaful we call takaful operator, the operator that operate the fund. Okay. Okay, so in insurance contracts, when the policyholder pay premium, that premium is basically owned, will be transferred to the insurance company. So insurance company have 100% ownership toward the premiums, whereby in takaful, the contribution paid to the pemegang amanah, trustee that manage the fund. That's why we call takaful operator, that operate or manage the fund on behalf of the police, participant. Okay, so the contribution still 100% owned by the insurance participant, insurance participant, ada participant. Okay, because it is risk sharing not between the policy holder, the the participant, with the takaful operator. It is risk sharing among the participant. Okay, so risk sharing, they contribute together the fund belong to this group of participants and they share the risk. Takaful operator as the third party that comes to manage and operate the fund on behalf of this group of participants. Okay. So insyaAllah next topic we discuss the types of contract that underline the principle of risk sharing among takaful participant. Okay, like in insurance, the policyholder, The contract underlying is a buy and sell contract. They buy a policy. When we buy a policy, we pay money to the seller, isn't it? Now the money is totally belong to the seller. Similar with insurance. Okay, so the premiums will be transferred to the insurer. Okay, that's why it depends on the insurer to they are going to manage the fund. Okay. Okay, now we proceed with the first element, the permitted elements that exist in insurance contract. Okay, the first element is riba. Okay, so riba or interest. Okay, riba in Arabic term, interest in our term lah. Okay, in English, in English, okay, in the market we call interest. So what is interest or riba? It is predetermined excess or surplus over the principal in relation to a specific periods, and also it represent increase, additions, expansions, or growth of money. Okay. This one general interest like people say do not do not take a loan from the conventional banks. They will charge you high interest. In Islamic bank we call profit rate, kan? Interest, okay? Meaning to say the additional money over the principal. Like we apply loan for 10,000, so the banks charge us a certain percentage of interest, which at the end of the day from 10,000 it becomes 30,000. So 20,000 of interest. So it is predetermined excess or surplus, meaning to say the banks will inform us, if we give you 10,000, you need to pay us this much, this percentage of interest yearly. So which is after calculations it become 20,000 of interest. So it is predetermined excess of 10,000 lah. Okay. Okay, so or surplus over the principal in relation to a specific periods. So we give you 10,000. This is percentage of interest, and this is the periods of financing that you need to pay, 5 years or 10 years. So we will calculate. If yearly is 6%, so the calculations will be done within the period of financing. So we call interest. Okay, meaning to say it is syarat. It is the term that given by the banker or by the financier, by anybody to the one that need money for for a certain period, and this is excess of money that you need to pay. Okay, so we call interest. If we just look at it generally, we can say that it is unfair, and it is like somebody take advantage over others' difficulty, isn't it? Kan? So interest is the excess when and then when we relate to the finance context, we have the the principle of time value of money. So because of the banker, they will lose the opportunity cost, because they give 10,000 now, and then they will only get 10,000 later on, after few years, after 10 years, 20 years. So they will lose a certain, maybe a profit lah over the money, because money now and money in future, the value of money now and value of money in future will be different, isn't it? So time value of money will allow this, the excess of funds. Okay, the thing is how it becomes a riba, because of the excess of money is too apa, excess, is too many excess, like double and triple, and that excess actually bring difficulty to the other party. Okay. Okay, increase, additions, expansions of growth. That's determine a riba. Riba when it is practiced, uh, the unfairness is clear, and then the bank, for example, just make money out of the loan that given to the customer, double and triple, 100% increase. So then we call riba because it is unfair to the other party. So that is why Islam prohibit that practice. Okay. So these are the dalil or the Quranic verse that relate to the riba. Just mana read the translation. Those who consume interest cannot stand on the day of resurrections except as one stand who is being beaten by shaitan into insanity. Because it is a practice of shaitan that always wanted the bad things that happen to people. That is because they say trade is just like interest, but Allah has permitted trade and has forbidden interest. Basically, Allah allow us to commit, to practice a trading, buy and sell, or any contracts. But Allah do not want us to commit with interest, which is we tend to ask people to give us a lot of money, excessive or apa nama dia, excess of money too much. Okay, so that we will become rich and other people will become poor. So whoever has received an admonition from his Lord and disease may have what is past is a fair rest with Allah. Okay, but whoever returns dealing in interest or usury, those who are the companions of the fire, they will abide eternally therein. So the practice of eating, we call eating lah, makan, eating interest, eating others' money, too excessive, too much. It basically it is follow the way of syaitan. So these are the part lah. Qalu zalika bi annahum qalu innamal bai'u mithlu riba. Oh, this one. Trade is just like interest, but Allah has permitted trade and has forbidden interest. Wa halallahu al-bai' wa harrama riba. Okay, Allah permit us to do any transactions, but Allah do not permit us to practice riba. Okay, so Allah declares war and riba. Uh, okay, this one also examples or a few Quranic verses that mentions riba. Okay, this one in Surah Al-Baqarah verse 275. This one so trade is fair exchange, fairness, exchange of goods or value. Okay, if you want to buy a car, so the car should be on market value because the market value is determined by the economic situation and or many other factors. But if there's one seller that offer us too much or too expensive car which is not tally with the market price, so it's also considered as a riba lah. It is unfair exchange. Fair distributions of risk and return. Fair distributions of risk and return, then we can relate with the insurance practice. This one, riba, oppressive or unfair distributions of risk and return, unjustified enrichment at the expense of others. Ada lagi tak? Okay. Then, is there any? Okay. There's no slide that explain riba and insurance, isn't it? Okay, let me explain it. So which part of the insurance contracts that practice riba? Okay, what I can say here based on my understandings, the part that consists riba in insurance contract is when the policyholder they they transfer their risk to the insurance company and they have to pay premiums. Okay, and they have to pay premium. Okay, wait, yeah. Wait, allow me. Sorry, yeah. Okay. Okay, let's continue. Okay, which part, when the policyholder practice a risk transfer, they transfer the risk to the insurance company. Okay, when they transfer the risk, they need to pay a premium. So how much premiums that that is paid to the insurance company, and how about the protections? Okay, usually the insurance company, after they calculate the risk level of the policyholder, like say, okay, they inform the policyholder, you need to pay 100 ringgit premiums monthly, for example, and these are the list of protections. Okay, the list of protections, for example, death benefit 100k, and then accident, and then critical illness 50k. So all the risk is actually a very huge protections. And how about premiums? Okay, now the policy holder pay 100 in exchange of the 100k. Can you say it? Because their contract is based on buy and sell contracts. Okay, if buy and sell contracts, we only need to pay the value of money based on the value of goods that we exchange, isn't it? Like we buy fruits, so 10 ringgit fruits or 20 ringgit. So 20 orange, for example, we get. Okay, so now the premium paid, because their contract is based on buy and sell contract, they transfer the risk based on buy and sell contracts. So the policy holder, okay, they buy the policy. That policy value is 100k, all the list of protections. Okay, and they exchange with the premiums 100 ringgits. So the exchange is not tally between the the protections, and also between the premium paid. Okay, so that is why we consider here is the practice of excessive or riba lah, excessive exchange of protections with the premiums, with the money. Okay, what more if the protections, the risk is not happened yet? So you exchange something that is not happened yet and something that is uncertain. So that part we consider having uncertain element or gharar element. Okay, so riba exists when it exchange, risk transfer through buy and sell contracts, exchange of premium with the protection which is unequal, is unfair, is unfair. Okay, and then another part of insurance contract that having riba elements, when the insurance company, the money, the premium that they receive, they make investment. They will invest the money to get more profit, to make their money grow. Okay, and okay, and then the investment that involve is not a Sharia compliant. Okay, so usually interest or riba not only exists in a loan, not only exists in unfair exchange of goods or value, but also involved in apa nama dia, in investments. Okay, the investment, we call investment interest lah kan, or usury. Okay, the profit that they receive for investment, and the investment is non-Sharia compliance, basically high interest given to the investor. So that part also we consider having riba. Okay, excessive receipt of interest from the investment. They pay now is 1,000, maybe 1,000k, and then we receive a monthly interest or very huge interest from the non-Sharia compliant investment. Okay, so two parts of riba that practice in insurance company. Okay, the first one is in exchange contract, buy and sell contract, buy and sell policy and protections, and also from the in the context of investment made by insurance company, which is not compulsory to have a Sharia compliance investment. Okay. So far clear? Clear? Any question?
No, no question.
Class?
No question.
No
No,
question.
No question.
no question.
So
Yeah.
let me proceed. Related hadith to riba. Okay, the bartering of gold narrated by Umar bin Al-Khattab. Okay, the Prophet Muhammad sallallahu alaihi wasallam said, the bartering of gold for silver is riba. Okay, usually gold for silver, because value of gold and value of silver is different, isn't it? Not same. Except if it is from hand to hand on the spot and equal in amount. And wheat grain for wheat grain is usually except if it is from hand to hand and equal in amount. Equal in amount is means that how many gold, is it how many grams of gold, and then how many grams of silver, in order to ensure the exchange is in equal value. Okay, we cannot exchange 1 gram of gold with 1 gram of silver. For sure the value is not similar. Okay, and the exchange must be done on the spot, not promise now, but the exchange is done tomorrow. Why? Because tomorrow the value of gold or silver will be different. Uh, and barley for barley is usually except if it is from hand to hand and equal in amount. Why barley? Because this is food. Okay. So food, if you want to exchange, must be on the spot. Okay, if tomorrow maybe the value of barley, the quality of barley will be different. Huh? And then narrated by Jabir, the Prophet Muhammad SAW cursed the devourer of usury, as also is giver, the scribes of the deed and the witness to it, and said they are all equal in the degree of sins. Meaning to say, all people that have that related to the transactions, it is also commit a sin. Okay. So there are two types of riba. Okay, riba an-nasi'ah and riba al-fad. I just explains in general, because I think for this course you only need to have which part of the insurance practice having elements of riba. So riba an-nasi'ah and riba al-fad. Riba an-nasi'ah basically it's related with the loan of money. Okay, whereby riba an-nasi'ah is related with the contract, like a buy and sell contracts. Okay, it is not exchanged equally. Riba an-nasi'ah is excessive in terms of loan given. Okay, so this one classification of riba, I think you can read later on. Okay. So okay, second elements, the prohibited elements that practice insurance is a gharar. What is a gharar? Gharar is a risk, uncertainty or hazard, something that is uncertain. Because uncertainty will attract a risk. Okay, or it can become a hazard. So technically, sale of probable item whose existence or characteristics are not certain. Uh, eh, Technically, gharar is sale of probable item whose existence or characteristics are not certain. If we just say to our friends like, I want to sell you my car, without mentioning what type, what is the brand of the car, what's the color of the car, is it 10 cars or only one car? Okay, no specific details on the subject matter, then it may consist of uncertainty element. Okay, because our friends maybe expect something else. Okay, this brand and other brands, but he end up something different that given to them. Okay, so in Surah Al-Baqarah verse 188, and do not eat up your property among yourself for vanities, nor use it as bite for the judge, with intent that he may eat up wrongfully and knowingly a little of other people's property. Okay, please Please do not meanings that for example buyer and seller cannot take apa nama dia, the the seller when they say, when they want to sell something, they shouldn't have any intentions that they want to sell something that is will bring loss to the other, and just want to eat others property, others money, just want to get buyer's money. Okay, so meanings that have bad intentions lah from that transactions. For example, selling something that is broken, and they do not mention uh, they do not mention it to the buyer. Okay, like selling fruits that is the damage, have a damage. Okay, so Allah the Almighty encouraged trade to be held by mutual consent between the parties involved. Mutual consent meaning that all parties know what exactly happens in the contracts. Even in pasar malam, the seller shouldn't just hide any damages of the goods or fruit or foods. Okay, they have to mention whatever details on the food, and do not have any shouldn't have any bad intentions lah. It is achieved through clear and ambiguous offer and acceptance made in the contract. So when everything clear, then there is a mutual consent. If there is something that is not clear, so I think no mutual consents will be getting. Kan? So example, sale of fish in the sea, sale of birds in the sky. This one very apa namanya, normal example given in the book lah. Like say the fisherman want to sell fish to the buyer before he going to the before he catch the fish. Okay. So it is unclear what types of fish that the fisherman going to get after that, isn't it? They cannot promise something that is not certain yet. Okay, so only after they catch the fish, and then they have to, then they can sell the fish to the buyer. Okay. Okay. Next. Okay. Part of gharar in insurance. Okay, we consider the hadith first. Narrated Hakim Ibn Hizam. Hakim asked the Prophet SAW, apostle of Allah, if I record, tadi kamu record baik ya? I want to ensure it's recorded. Okay, recorded. Okay. Okay, the hadith. Are you still okay, brothers and sisters?
Yes, doctor.
Okay, okay, so one hadith related to gharar, narrated Hakim Ibn Hizam. Hakim asked the Prophet SAW, a man comes to me and wants me to sell him something which is not in my possessions. Should I buy it for him from the market? He replied, do not sell what you do not possess. We cannot sell something that it is not our own. Okay, or we cannot sell something that it is still at the rack or at the shelf, the shopping market. No, we should buy it first, then after that we can sell it to others. This is a reminder from the Prophet. Okay, so the conditions of gharar, in terms of the types of the goods, the quantity, the times of delivery, when we want to deliver it, the ability for delivery, price, mode of payment. So these are basically all the necessary elements when we want to sell or involve into contracts. Okay, so if any of these element is not stated clearly, it consists of gharar and it is prohibited in Islam. Okay, like nowadays we are so open with the apa nama dia, online buying and selling, isn't it? So at Shopee, for example, so make sure the seller will detail out when they can deliver the subject matter to us. What types, what brand, how about the quality, the quantity. Okay, so is it just apa nama dia, ETA, expected time arrival, or they have stock? Is it booking, or they have stock with them? Okay, and then the price, mode of payment, is it apa nama dia, apa, cash on delivery kan, cash on delivery or need to transfer first, so everything must be clear, then it will be fair to all parties. Okay, okay, so why gharar, why gharar is permitted in insurance contracts? So the first one, absence or incomplete ownership. The seller has no right to the subject matter and cannot legally guarantee the delivery of the subject matter. Oh, yang this one very general. Non-possession of the objects, insertions of ambiguous condition. Sekejap. Okay. Yang this one is very general. This one is very general to the buy and sell contract. We return back to the insurance contracts. So which part of the insurance contract having gharar element? The element, the part is I think the first stage still apa nama dia, relate with the transfer of risk and buy and sell contract. Okay, buy and sell contract. I think I have mentioned before. The insurance, the policy holder basically they buy the policy, isn't it? Okay, they buy the policy. That policy consists of the coverage for the loss. So in returns of buying the policy, the insurance company is actually promised to protect the risk that they stated in the contracts. Okay, so in buy and sell contract in Islam, the pillars is buyer and seller. No problem with insurance company. Buyer and seller, the subject matter, and the price. The price here in insurance contract is the premium paid to the insurance company, isn't it? And how about the subject matter? What is the subject matter that involves? Is it risk? Risk protections? Where is the risk? Where is the they only stated that if in case you die, you will get 100k. Kan? So basically the real loss, the real risk or the subject matter in the insurance contract is not happened yet, and it is uncertain. Death is uncertain, isn't it? We never know that. We never know that when we will die. We never know whether we will having a critical illness. We will be admitted. We will get involved with accidents. So all those risks is basically uncertain, and that the risk actually become the subject matter in insurance company because they apply a buy and sell contracts. Okay, so in Islam, in buy and sell contracts, the subject matter, everything must be clear. When it is happens, what types of the risk? Okay, what types of the risk that has happened? Okay, that sold to the insurance policy holder. Okay, so that part is actually having gharar and okay, yeah, yeah, okay,
Okay.
okay. So the types of risk, the how much the loss will happen, the real loss is also uncertain. Okay, you. So next is Maisir. Yeah. So what is Maisir? Maisir is Arabic word. Um, okay, Arabic word. Yasira, to be easy, and Yasara, to succeed. Okay. Allahumma yasir wa la tu'asir. Yasir is easy, easy. Okay. It means lucky chance or easy success at getting something of value without earning it. Uh, or in Malay we call judi. maisir. Gambling. In English we call gambling. Okay. So just gamble. Okay, gambling. It just to make easy lah. So from the Sharia perspective, it refers to qima, means a game with the conditions that the winner of two contestants obtain something from the loser. So they are involved in gaming. So if one win, the other will be lose lah. So maisir or gambling is considered as a combative relationship between contracting parties, each of whom undertakes the risk of loss, and the loss of one means gain for the other. Okay, it is not win-win situations. No, if we win situation, we do not call it gambling. Okay, so maisir is a form of gharar in its worst uncertain outcome lah. Also, okay, so this one is Surah Al-Baqarah also verse 219. They ask you, O Muhammad, concerning alcoholic drink and gambling. Say in them is a great sin and some benefit for men, but the sin of them is greater than their benefit. And they ask you what they ought to spend, saying that which is beyond your needs. Does Allah makes clear to you his laws in order that you may give thought. Okay? So concerning alcoholic drink and gambling. This one both lah. So this ayah mentions that Allah prohibited the Muslims to involve to drink alcohol and also to involve with gambling. Eh? And some benefit for them. Some benefit for them. The alcohol, the not the drink lah, the alcohol kan. Oh, the one is drug yeah. Some benefit for them, but the sin of them is greater than their benefits. Okay, because some people say it's benefit for them to drink and to involve in gambling, but Allah says the sin of them is greater than their benefit. Meaning that the bad effects of these two is greater than the benefit. Okay, and they ask you what they ought to spend. Say that which is beyond your needs lah. Okay, so in this ayah is clear that these two are prohibited to the Muslim. Okay, because I think we all know that these two will bring negative effect to our life, isn't it? Okay, this one this one that relate the summary lah, riba, gharar and maisir. Okay, so let me continue with maisir because I'm not yet discussed the maisir from the insurance practice kan. So in maisir, the insured could receive huge amounts of money without equivalence, inputs or a premium. Okay, we go back to the insurance contracts between the policyholder and with the insurance company. So insurance company by receive premiums 100 ringgit for example, they promise to pay for 100k for death benefit for example to the policyholder. Okay, now okay, first scenario, the policyholder die. So the policyholder die. Okay, the policyholder die. The policyholder will receive 100k death benefit, isn't it? So what happened to the insurance company? We consider policyholder win, insurance company lose. Kan? Okay. And then second scenario, nothing happens. Nothing happens to the insurance and to the policyholder throughout the tenure until the maturity of the insurance contracts. What happened? Which one win?
Policyholder.
Policyholder win if nothing happened to them. They will not get nothing. Isn't it? They get nothing. The company will win because the company doesn't need to pay 100k to the policyholder. So the policyholder will win. Lose ke win? Lose. So the company will win. So no win-win situations in this case. So they pay, nothing happened to them. So the insurance company will be happy, so much happy that because nothing to be returned back to be paid to the policy holder. So we call a gambling. And another thing is the intentions of the policy holder. The first intention is why they want to buy the policy is basically to get to win, isn't it? To get the protection. Is it because to protect over risk, or they just look at okay 1 million policy, 100K, then when something happens to me, I will be a rich man. Okay. So the main intentions, the initial intention is actually money oriented. Okay. I cannot deny that this also happened to Takaful participants because the way the salespeople they market the product is they just market the protection, isn't it? The money. So why people subscribe to the scheme because of money? So when nothing happened to them, they are not say Alhamdulillah. They are not say like okay I'm happy because nothing happened to me, but they say that I'm loose because I already paid so much, but I didn't get nothing, isn't it? Because I get nothing, kan? Uh, so in this context, it is considered as mysir gamblings of people because of the intention to subscribe to the insurance policy or takaful is mainly because of money, not because of to pay protections or protect over the risk. It becomes a second intentions. Okay? Uh, so we call a mysir. Yeah? Okay, tengok kat sini paying premium without getting any amount in return, and this one in case yang ni nothing happen to them lah. Insurer lose if there are too many claimants. Premium collected exceed the claim, insurers could make huge profit. Is gambling also from the side of the insurance company because the money totally belong to them. Okay. Okay. So that's all for the difference between insurance and takaful and the prohibited elements that apa namanya practiced by insurance company. Okay, it's already 1 and 45 minutes, 1 hour 45 minutes. Okay, I want to stop the recording for this topic. Okay.